Hello traders, it's Samurai Trader here. Welcome to our training session. Today we're going to be covering a lot of information, so if you don't have a pen and paper handy, please get one, because I think we may cover a couple of ideas that you do find helpful. Now, as you know, my target is $400 a day per contract per day, so we're going to be looking at various techniques and some ideas that may help you get there also. So specifically, I'm going to be targeting or talking about range bars on the ES, the E-minis. I have a client that really likes the 2 range. He's a new client. He said to me, can I go back and perhaps go and give my feedback, because as most of you are aware, I usually trade tick charts or volume. So we're going to look at 1 and 2 range on the ES. Now remember, range bars, whether you're trading actual bars or candles, work on all markets and all time frames. Actually, I should say all markets, because time frames, the range is virtually the time frame itself. So we're going to be exploring exactly what a range bar is in a moment, but a couple of ideas I want to run past you. First of all, number one, as I have on every video, talking about risk: do not trade with the rent money, don't trade with scared money, etc. So please feel free to have a read of the disclaimer, and if you haven't already done so, please go to full screen down on the right hand side, because in a moment we are going to be looking at, just down here, we are going to be looking at some charts as well. Now, I don't have all the answers, traders. I learn something new every day, but one advantage I do have: I've got over 23 years experience as a trader. I research every day. I'm involved in funds management, and I train traders every week, and I day trade virtually every day of the week. What that gives me is a huge amount of one specific thing that you can't buy, and it's called screen time. I make mistakes every day like everyone else, but you know what? I learn from them, and I learn something new every day. So I know for some of my students and even some of the general public that watch some of these, you may think, oh, here he goes again, if you've watched my videos a number of times. But I have a huge advantage in dealing with traders on a daily basis that are doing brilliantly, that are making huge money, and others that are really struggling. And I love this line out of the movie The Matrix, and I've forgotten the name of this character here, but he said in the movie, I can only show you the door, you're the one that has to walk through it. In other words, I can only show you and share with you ideas that work for myself and other traders. You have to pick up with those and run with those ideas. Now remembering, traders, you've heard me talk about this previously, the sign of an intelligent person is how open they are to new ideas. Approach everything with the question.
Strategy alert.
Sorry, just had a don't know if you just heard that on there, just had a trade alert. We've got a short setting up, by the way, on the ES. It's I think it's a T89. I'll turn most of my charts off. We'll have a look at that in a moment, because we're about to look at the ES charts. Anyway, getting back to this, is that I approach everything with what can I learn from this, and it gives me a total, and it's given me a total different perspective or approach to life and to trading, rather than this didn't work, damn it, what can I learn from this? And that's just so important when it comes to trading, because as you've heard me say time and time again, 90% is head stuff. I'm a huge one on personal development. I love listening. When I work out nearly every day, and when I work out, I'll listen to Robin Sharma or to Tony Robbins, or the great late Dr. Wayne Dyer, who I absolutely who those of you unaware, Dr. Wayne passed away about 4 weeks ago, an absolute tragic loss. And I have this little slogan, which I must in dedication to Dr. Wayne Dyer have in front of me here, and here's something that he said: without exception, begin every day of your life with gratitude. As you look in the mirror, say, thank you, God, for life, for my body, for my family and loved ones, for this day, and for the opportunity to be of service. Thank you, thank you, thank you, Dr. Wayne Dyer. And it's amazing, traders, when you approach life with an approach of gratitude, how your attitude changes. Now, what have we got to be grateful for, traders? We've got this wonderful thing in front of us called the markets, the financial markets, that we can profit from virtually every day of the week. And I'm so grateful that I've learnt how to trade. Now, this is something that I put together for some traders, and when I'm doing coaching now, and it's not in the fast track program, but I'm actually going to incorporate it as an extra module now, or as an addition. This is something that I have them tick off. I deal with over 70% of my traders are experienced traders, and a lot of them are jaded. They've been burnt. That is, I've given it a go, they've failed, or it just hasn't worked, or they've blown their account 4 or 5 times, and a lot of them become very, very gun shy. That is pulling the trigger. And remember, discipline is like a muscle. The more you use it, the better or the stronger you get. So as you work out, you become stronger, of course. Likewise, when you apply discipline, you become better at applying discipline. So here's a little thing that you've got. So I've got this out on an A4, we call it A4 paper here in Australia. I trade what I see, not what I think. 20 rules-based trades a day. If you're a brand new trader, that's the best way, and it's the only way actually to learn how to trade, is have a rules-based approach. In this particular case, the 8:21:34 to confirm the trade. That is, if you're a new trader or a trader that's coming to me to be retrained, we trend trade only. Let me say it again, we trend trade only. That's the only trading we do. We'll mark up T89s, which is a counter trend trade, just to get used to them, because they are high probability. Now, if you've got a major discipline problem, you don't even mark up your T89s. But anyway, getting back to this sheet, here you put your date in. So it might be, for an example, here in Australia today, it's the 1st of the 10th 15, or the 10/1/15 for my USA friends. And as you enter a trade and mark off and complete a trade, you'll mark these off. Now, to break the chains of poor discipline or I nearly said core reluctance, well, it's not core reluctance, trade reluctance, you mark these off. You may have initially an objective of 10 trades a day. Now remember, when you first start trading, or if you're retraining yourself, you must execute 100 trades flawlessly. If you break the rules, you go back and start that count over again. And you must retrain yourself with a rules-based trading strategy. And very, very important, in front of us here we've got 2, 4, 6, 8, 10, 11 different strategies. Now your T1, T2 are trend following. You've got your T10's a changing trend, your T25 is trend following, so is your 34 and your 89. With the others you may actually remove. Now here, as you mark them off, go for initially for 10 trades a day. If you're on the simulator, you may go for 20 a day before you risk real money. This is absolutely critical, and unfortunately I still see traders that invest in my program or attend even my live seminars or my webinars still making these mistakes. I want to slap you. Stop it. You've got to, it's just so important that you instill discipline and patience and focus. It really is. I know I'm on my high horse here, but it's just you know, I see so many people come through with so much potential. You know, I remember someone once said to me, you can't bank potential, and it's true. Potential has got to be turned into discipline and into skill sets, and there's a whole range of ways of doing it. But anyway, let's go on to the next chart here. Now the other thing that you want to have in front of you, as I did here, sorry, and I skipped past this here, this slide here, is that all I have in front of me is a really minimal, clean, tidy desk. If you were to back in the old days when you could go up into the airline pilot's cockpit and see what they were doing, I mean, those days are gone now. We're all locked out. But in the old days, when you could go up there, or as you're boarding a plane and you see them working away preparing for the flight, what are they looking at? They're looking at their flight lists. They're going through a checklist. but do you see a lot of junk there? Do you see newspapers and books and a whole lot of rubbish? No, what they've got in front of them is their checklist. Their work area is tidy and clean. Traders, I can't stress enough how important that is. What I've got on my right hand side is my notebook. As most of you are aware, and those that have been with me live know that I'm a compulsive note taker. I take a huge, I want to say a huge amount of notes. Look, I would fill 2 to 3 pages a day, just ideas, things, and at times you're sitting there 15-20 minutes if you're an active trader in between trades, and sometimes the market's quiet and you're sitting there and you think of something, jot it down, go back and review the good, the bad, and the ugly, put it all down. And in these folders here I've got my patterns and my trading rules, etc. So that's all you want to have in front of you. So what is your trade qualification list? So this is one I put together with a student a couple of days ago, and I thought this would be really good. And in actual fact, it was because of this particular gentleman. I did the training session there on Heikin-Ashi candles, and so we typed this up while I was here, and these are the rules that we've put together with him. And you'll see here that basically they're trend following. All the EMAs have got to be in the direction of his trend, and of course he's trend trading only to begin with. So very, very important that you put together your list of rules. Now as we move on to the charts, just very quickly, if you haven't already subscribed to my YouTube channel, please do. And traders, so what we're now looking at is the ES range charts. On the left hand side here we have what we call a one range chart. That is one range candles. Each candle here is worth $50 or 4 ticks. And on most software programs now you can adjust. You can have in the case of the ES you can have 0.5, which is 2 ticks, which is $25 candles. You can make them, as we've got on the right hand side, 2 range candles, which is $100. So you can really set them for any value. And what you want to look at, of course, is when you set these up, which is more tradable. And it depends which trader you talk to, what they've been trained on, etc. One of the things I like to look at is, when I'm looking at a good market to trade, is how smooth is the market itself. And when you go back and you look at a range, you can see here we've got our yellow line, of course, is our 34. How tradable is this? Now if we're following a 34, which is really a major magnet in the market, gives you a good idea. And here of course you've got your cyan is your 89. We've got a bounce off the 89. We've got a bounce here off for 200. And if we're trading all of these in a trend direction, we can see here it looks fairly tradable. Gets a bit choppy there. And one of the ways of cutting out some of that chop is to increase the time frame usually. So we can see here that one range looks good, particularly now we're looking at the after hours market. That is down here in Australia. It's 1:09 p.m. right now, so we're in the Globex market, the after hours. In LA, what would it be over there? 5 hours, so it would be sorry traders, I'm just trying to work out your timing. I think it's probably about 7 p.m. or something like that, 8 p.m. at night, something like that, and getting on later, very late in the evening in New York.
Strategy alert.
So sorry about that little strategy alert. We can see we just had a nice little pop-up there. Now, so these are the sorts of things that I look at, is how smooth, how tradable is a chart. Another thing I like to look at, of course, is our stoke down the bottom, because if we're trading T2s and T10s, how smooth is that? And of course I always like to look for my good divergence trades. And the other thing is, what's my 8 EMA doing? And you know those that are students of mine know the rules to different strategies. So one range looks good, but if you want a slower market, or something that's a little slower than a one range, because during market conditions the one range can really move, you may consider a 1.5 or 2 range chart. And so we go for 2 range is $100 per candle. Now this is something that we need to consider is in our risk management. Now if you're trading, say, a T2 where your stop may be, or your entry, and if we look at this particular trade here, you've got a T2 right here. Now in this particular case, your candle or your entry was actually, I'd say, only one tick down. That's okay. So your stop is probably, if you go for 2 ticks above this candle where that little arrow is, you've probably only got about what have we got, 100, about a $137 stop. However, if, say for an example, you were going in this trade, which is a T89 trade and a pivot bounce, so a very high probability trade, your stop here was about $175 to nearly $200 if you're 2 ticks under your little low, because each candle is worth, remembering, to range $100. So you need to consider risk management from the point of view of your stop. Remember what one of our golden trading rules are: we never risk any more than 2% absolute maximum, preferably 1%. Now I work on 0.5%. that allows me to add to a position up to 4 times, or to have other trades going on other markets at the same time, which I don't normally do. I might do it maybe once a day. I'm just very cautious, because most of the markets I trade are fairly well correlated. So if you get stopped out on one, you may find that that will happen to another. Now a couple of other considerations here we want to look at is, remember what I call the rule of 3, is that the market tends to move in waves of 3. So we can see here, you may have counted this one as a pullback and as a trade here, still a bit sloppy, but definitely here 1, 2, 3. The reason I bring that up is, if you're looking at your T20s, I really love to look for T20s after I've had 3 trades in a trend, particularly if you've had a pivot bounce. So T20s are fantastic after you have a good pivot bounce, and if it's a T89. Here we had and let me just point this out, here we had a T25, and you were stopped on that trade, and the reason being your stop would have been 2 ticks below, which would have made your stop at $125. But this one stopped this out because it ticked down 2 ticks, it stopped you. But you had a winner over here, you had a winner here, you had another winner here. And remembering the great advantage with the T25 is that you're in fairly early, and which means the earlier you enter a trade, of course, the higher the profit target. You can set a higher profit target on those trades. So you had a winner there, winner, stopped, but then you had another entry, then you had a winner and another winner, and in actual fact your T25 was right there. So all very nice trades, and you had another one over here. Now remembering 1, 2, 3, okay, just remember the rule of 3. Now in natural fact it pulled up and it kept going, but you never know, traders. You just want to be very cautious with that. And finally, and you can see all these T25s, you had T25, 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 T25. Now on these T25s, students, I'm actually looking for remember, a 2 to 5 candle pullback. Then we had up here a T20. So with these T25s, I was looking on this 2 range here as a minimum of 2 candle pullback. So let's move along here. T25s, let me see what I've marked up here. Okay, all right, so what I've got here is the after hours market as well as the main market. So if we go to the markets open here, so we had 1, 2, maybe 3, but then we had a change in trend. Up here you had a T25 stopped on that one, but then you had a winner, stopped, winner, 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 winner. So you've had a couple of losses there, but your winners far exceed, and they always do. T25 is just such a reliable trade. Now on the, and by the way, perhaps I didn't mention this, I can't remember now, but it's been I was up very early trading, of course, this morning. It's now early afternoon. Is the purpose of this is just to really to review how do our setups work on I think I mentioned this. How do our setups work on the range chart? So you can see here we've got a T2, you've got a T2, a T2 that failed, a winner, 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 T1, T1. So it works really well. Now what you'll find here is you've got a T20, 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 T20. Your T20s of course are best with the trend unless you've had more than three winning trades, I should say, and it's getting ready to change. Winner, 225. So getting back to this, the setups work brilliantly on 2-range, ES, and on all other markets. The consideration though is your stop and your account size, because remembering, if we're looking at a 2% risk, and let's just assume the worst and say you have 2 full candles and 2 ticks, that means you've got a $225 stop, which means that you would need an account size of about $10,200, $10,300 to stay within your 2% rule. Now if you don't understand the risk parameters here, 2% working out, you should not be trading. Strategy, by the way, alert. You need to really make sure you've got that right. Now another consideration, traders, is that after hours you need to have your full margin in your account. So you'll see brokers advertise regularly, trade the ES with us or the NQ, and you only need $500, $700 per contract. That is during the main market hours. After hours it reverts to full contract, and I think at the moment with my broker it's around $3,800 per contract. So that is another consideration. So let's just round it off for a moment and say that if with the ES after hours the full margin is $4,000, you need to have to trade each contract by 2%, that's $80. So you need to ensure that your stop is no greater than $80. Now if you're not understanding this, please drop me an email and I'll perhaps do another video for you on risk management. This is all very clearly explained in the fast track program, but it's really important that you understand this. Now what can you do then? So the 2-range, as you can see, you've got fairly wide stops in many cases. Well, you may drop down to the 1-range. So if we go back to the 1-range, of course, with 1-range each candle is only $50. So in a lot of these trades your stop is only going to be $75. Could I explain what that is then? Why 75? Each candle is worth 50, 4 ticks. Your stop would be, I would recommend you consider and do your own testing on this, 2 ticks below your little swing lows. Okay, so you got a little swing low there, you got a little swing low there, and of course these are fractal points. Okay, now a fractal point, as a reminder, is where you got 2 candles on either side, either higher or lower. So my stop is 2 ticks under that. Strategy so it means, sorry about that traders, we've just got a couple of trades firing off here. So we would be 2 ticks below, which is 2 ticks on the ES is $25 plus a candle which is 50, so our stop would be $75. So in meeting our requirements of having a risk factor per trade of no more than $80, a 1-range meets that. Now we can see here very clearly that our T2s, our bouncers all work beautifully. And remembering, with range as with tick, with volume, we're waiting for a candle to close on or above the 8 EMA. I've got alarms going off here, I've got phones going off, sorry about that. Now let me just quickly look at my notes for one moment. So traders, in closing review on my notes, just the last comment I'm going to make is this, the old saying that many of you heard before: he who sweats more in training bleeds less in battle. He who sweats more in training bleeds less in battle. In other words, the more screen time you obtain, the more backtesting, the better your statistics. Remember, as professional traders, we work on probabilities. Probabilities and statistics give you confidence in taking your trades, and particularly when you combine all of that with your trading rules and your money management rules. And after a period of time, as with some of the institutional traders I work for, they may only fire off 3 trades a day. Very high probability. The probabilities are over 90% on some of these trades, and they just sit there and wait for those. So what is your ideal probability trade? And in closing, if you're getting too many trades, increase the time frame. So traders, I've gone a little over time, I've got phones going off, alarms going off, got to go and look at some trades. Until next time, good trading.